When selling options, one of the most important rules is to have yourself parameters. And everybody's parameters are going to be different for everybody. What works for me doesn't necessarily mean it's going to work for you. And what works for you doesn't necessarily mean it's going to work for the people on your left and on your right, vice versa, so on and so on. A lot of times I tell people, hey, specifically for cash secured puts, 4 weeks out, 20 delta, 80% in my favor, and I would like to get a minimum of 2% in premium. For me, this is what works. Some people always say, hey, Adam, why don't you sell a 30 delta or a 40 delta or a 35 delta? Because some people are greedy and they want to make more premium, and that's okay. In my personal system, what works for me, I like to sleep well at night. And one of the main reasons, not the only, but one of the main reasons why I do this is at a 20 delta, this allows me a one-time shot of a market dump where I'm okay and I can sleep well at night. And this is exactly what happened last week on Friday and last week in general as the market is going down. I'm going to show you a few charts. I'm going to show you the fear and greed index. But before we start, I wanted you to understand that there's a very specific reason why I pick my strikes. And even before, in Liberation Day, in April, when everything took a massive dump, sure, some of my cash secured puts did go underwater. However, there's levels to this. The first level is you want to give yourself a buffer, a cushion that if the market tanks, you're okay and you're still not on the water. The second and third level is buffers that even if you do get underwater, you'll be able to have an easy management of the position, which means that you're going to have an easy roll. Possibly even the price is going to come back before the expiration date where you don't have to even manage it and it's just going to expire worthless. If this is all very confusing to you, don't worry. I'm going to share my screen in just a moment and I will show you a couple of options plays that we're currently in on this channel to try to make sense of my style and why I say 4 weeks out, 20 delta, 80% in your favor with a minimum of 2% in your pocket paid to you for selling these options that we call premium. Before I show my screen, two quick things. Later on tonight at 8 o'clock Eastern time, we will have a live on this channel for the entire channel. 8 o'clock Eastern time, I'm going to leave a link down below in the comments. And at 9 o'clock Eastern time, I'm going to leave a link down below in the comments. We're going to have only a YouTube channel member live. Before I show the screen, what is a cash secured put? A cash secured put is when you are saying that you are willing to buy shares of a certain stock at a certain price at a certain date, and you are securing this put with cash, hence the name cash secured put. The price that you're willing to pay for it is called the strike price, and the date we call the expiration date. If the price of stock is below the strike price, you still have to buy it at the strike price. If it's above the strike price by the expiration date, this expires worthless, nothing happens. Around 80% of options expire worthless, which gives you, an option seller, a huge advantageous position as opposed to an options buyer. The thing is, it's not going to make you quick. It is minimal to moderate risk for moderate returns. If this is for you, then this is great to supplement your 9 to 5 or maybe even fund your retirement. Like myself, I retired last year at the age of 41 years old in 2024. And in 2025, I am 42 years old and sharing my journey with you, my subscribers. Now, take a look at the screen. This is a website. It's called CNN.com Fear and Greed Index. And this is essentially telling you where the market is at. Currently, the market is at a 50. 50 is literally neutral. In general, when you're greed or extreme greed, the market is going to have a pullback and you might want to cut or brace for impact. In general, when the market is in fear or extreme fear, probably it is oversold and there will be a bounce back. 1 week ago, we are at greed. So we literally dropped from 73 to 50, which is not bad. This is another chart The orange line is the 125-day moving average, and the blue line right here is the S&P 500. The closer the S&P 500 is to the orange line, the more neutral we are, and the further apart we get, we are going to be either overbought or all the way on the bottom, oversold. This, for example, is Liberation Day. This is April 3rd right here. You can see that we were way, way, way oversold. And this was probably like at 7 or 10. I don't remember the exact number. And then you can't see it anymore. But right here on beginning of August, you had the yen carry trade where, again, the S&P was below the 125-day moving average. So you as an option seller needs to try to somehow account for massive drops. This drop right here, where we dropped from 63.88 all the way to 62.38, we can account for, and I'll show you my options in just a moment. They're doing quite fine. However, if this drops another from maybe 62 to 6,000, maybe then it's going to start getting uncomfortable. The thing is, you cannot account for from here to here, but the best thing you can do is allow yourself the opportunity to be able to get a roll. And if you missed it, I have a video up above where I was rolling a $655,000 SoFi position. Now, I do think that the market is going to come back. Sure, maybe we go to fair, maybe we go to extreme fair. Who knows what's going to end up happening, depending on what Trump is going to say and other leaders around the world, specifically when it comes to tariffs. But you as an option seller need to be able to account for a massive drop. And when I'm selling my options, I usually account for 1 to 2 massive drops. And when I'm selling my covered calls, I account for 1 or 2 market rips to the upside where I don't get assigned. And as you see, it went from 73 to 50, which is literally a massive drop. And I'll show you my options in just a moment. They're doing okay. But if I was selling my options instead of at a 20 delta and I was a little greedier at a 30 delta or 35 delta, like some people like to sell, well, my options right now would be underwater. Because I have parameters set, because I have a system, because I treat this like a business, this gives me the most advantageous position possible. By advantageous position does not mean a non-losing position. It means that you have the biggest possibility of success. Sure, anything can happen. We see it time and time again. The only thing you can do is stay disciplined, get comfortable in uncomfortable situations, and give yourself a little bit of cushion for the pushing on the downside, like I'm showing you right now. That happened literally last week. Let's go take a look at a couple of the options. The first option we have is a HIMS $34 cash secured put. I opened this on July 7th. The expiration is going to be on August 15th right here. Last week, HIMS actually ended the week up 8.4%, but it did have a drop from around this $70 mark to $62. This is not a problem whatsoever. If you go back to my option, my delta is actually right now at 0.05, which means this is not going to get assigned. I'm all good for this one. I'm just showing you one example. I'm actually up on this one right now, 54%. All good. But if you notice on that massive drop on Friday, literally I had to give back 64% of my profit, which was a major, major give back, but I accounted for the market dip. Let's go take a look at some other options that are not as good looking as this HIMS one. This is Lemonade. I opened this up on July 2nd. This expires on August 15th. And this is a $33 strike. As you can see right now, Lemonade is at $36.44. And over the last week, it was a really, really bad week. It dropped 9%. It dropped from that $40 range all the way down to $36 with this massive drop right here from around that $37.50 mark all the way down to $36. You would think that we would be in severe trouble. And although it doesn't look great, it doesn't look bad either. We're currently only down 20% on the position, which means I collected $1.30 on the position right here. And currently it's worth $1.55, which means that if I wanted to buy it back right now, I would have to give back 20% more money than I collected. Not a problem. But you see, we had a massive, massive dip right here of 30% that day on Friday, and we're still not in a bad position. Our Greeks right now is only 0.28. So with a massive, massive price drop right here of 9% for the week, and actually 14% for the month, we're not doing so good. Our positions are still not so bad because we are only at a 0.28 delta. We're not doing bad. You understand what I'm trying to say? That you got to give yourself the most advantageous position possible by following a routine. I'm not only doing 20 delta, I'm not only trying to get 80% of my favor, and I'm not only collecting 2% on the play. Sometimes I'll go less than 20 delta. I believe this play was actually less than a 20 delta. And I believe in this play, I actually collected like 3 point something percent in premium. So the premium was juicy. I went lower delta, and there's opportunities in certain plays. Now, we do have an earnings coming up, and anything can happen. However, the point of this video is not to tell you I can plan for anything that can happen. No, the point of this video is to tell you that if you have a formula, and my specific formula works for me, that you have to give yourself an opportunity for a situation that can arise. And the situation that can arise is a liberation day. A situation that can arise is the tariffs that started on August 1st from Trump, because Trump didn't do a taco. Trump did not chicken out. Trump initiated the tariffs, which I think are going to be just fine. They're going to go away. So even if we have another drop right now, I'll still be okay for a very, very easy roll. And even if I have two massive drops on this lemonade position, I'll still be okay with a manageable roll. It won't be optimal, but it will be okay. Let's go over a couple of other positions. This is the Oscar $11 strike position. This was bought on July 11th, expiring on August 15th. On this specific position, we're actually up. We collected 45 cents in premium. It is now worth 23 cents. And even if I wanted to buy it back right now, I would have to give back around half of my premium, holding half of my premium on my pocket. But look at this. Literally on Friday, this thing went up 77%. I lost 77% of my total contract value, right? But I was up, so it's not that bad. The delta right now is still only a 0.14 delta. So even with the market dropping, the delta is still under 20 delta. Look at Oscar's week, guys. Oscar is down 6.7% for the week. Oscar is down 24% for the month. And guess what? I'm still doing good, because I ended up doing this literally in the beginning of July. So in the month of July, we're down that 23%, and I'm still sitting pretty on this play. If I'm not mistaken, on this play, I collected close to 4% premium. The whole point is, don't be greedy. I know there's a lot of people talking about their systems, what they do, and that's fine. But what I do is I try to give myself one magnitude or one drop or one market dump, whatever you want to call it. I try to accommodate myself for what happened on Friday and last week, where the market took a dump and you're able to absorb it with your options. Now, I might not always be able to absorb many of these, but usually I'll be able to absorb one or two of these, still not being assigned, and or giving myself a very easy breezy, beautiful cover girl roll and management of the position. Let's go take a look at a few other positions. This is my snap position. This is a big position. I opened these up on July 1st. The expiration is on August 15th. And I collected 42 cents. This contract is now worth 40 cents. Technically, I could buy it back roughly for the same amount of money that I collected if I wanted to do this. But I'm not going to do this right now. I think I'll be okay. Let's see how bad Snap did over the last week. Over the last week, Snap is down 8%. So we accounted for this major dump. I believe I'm good for the month. So for the month, we're only down around 3.5%. But I was able to account for this massive drop right here And as you can see, I gave back 33% of my gains, 33% of my gains on Friday alone. And still, this is at a 0.26 delta, which is not bad at all. The only thing to worry about Snap is they have an earnings coming up. I believe Oscar's earnings is also coming up, and the earnings is for August 5th. Lemonade is also coming up, if I'm not mistaken. So it's a little worrisome to be going into earnings with Snap, but I do have 10 days after earnings, about a week, on all these plays to be able to manage this. So it is what it is. Now, I know we have another play on this channel, United Healthcare. And for the United Healthcare, I don't have any of those positions. And on the videos, I said I'm not opening this because I'm just straight buying shares and options. I still think it's a solid play. I still think it's going to be a manageable play. But if I had it with the expiration date of August 15th or August 22nd, whatever I was talking about in that video, I would just sit and chill and see what happens. It seems like the really bad stuff already happened. Sure, maybe more stuff can be piled on. But for anybody worried, just sit and chill, don't do nothing, and see what happens a little closer to the expiration of the actual option that you sold. But in that video, I did say the strike prices that I picked, I believe it was like 255 and 260 or something like this, was strike prices that if I was opening these was an entry point. So those are not for rolling. And in the video, I said this is for an entry point where if I'm assigned, I'm okay with holding the shares because I want to build out a position in United Healthcare. So I'm not going to cover this one right now. I understand that that one is down, but that's for another video. If you guys have questions, please feel free to ask down below. Do you guys understand why I have a system? Some people say, Adam, why are you so rigid? Well, the system does change up and down, right? It's not exactly this. However, you do have to have parameters and a system in place. I remember I had like $11 calls and somebody was kind of mentioning on the Oscar, like I forgot the comment, but they're like, why are you doing $11? I have 1450. I can't imagine the price is going to go down. Well, that's good. Your 1450s are underwater because you got greedy with your premium. Not saying it's not going to work out for you, but for me, I prefer not to be greedy and I prefer to sleep well at night. And even in market dumps, I'm okay. I guarantee you the person that said that is not feeling too happy that the price of Oscar is trading at 13 something, well below his 1450 strike price. However, so much above my $11 strike price that I'm sleeping very, very well at night. And the list goes on and on and on, so on and so forth. Guys, I hope this is making sense to you that treat this as a business. This is not financial advice. It's purely entertainment. I'm not a financial advisor. I'm just sharing my own personal journey with you. And what I could say is what helped me is treating selling options as a business, the same as you want a business to cash flow, the same way as you have assets, the same ways as you have liabilities, the same way as you have cash flow, the same way that you have to pay bills, so on and so forth. That's how I treat my options. And very similar to the way that you have change orders or you have invoice parameters, when you need to be paid, so on and so forth. I actually have parameters when I'm selling my options, the expiration dates, the deltas, the percentage that I want in my favor, the amount of premium that I collect. When do I manage? When don't I manage? What type of management do I do? So on and so forth. Guys, if you guys have questions, please join me on my lives tonight, 8 o'clock for the channel, 9 o'clock just for channel members. I really appreciate you guys. I'm about to go back to my one-on-ones, which I have coming up. And I really hope that you guys are getting something out of this channel. And whatever you do, no matter what, watch these videos right here to further elaborate my points. Thank you very, very much. God bless. Have a great day.